All right. Welcome, everyone. 19th of January 2022. For those of you that joined us last week, I promised you something new, something refreshing, a bit of a change, and that we would be hitting the ground running hard in 2022. Well, that came to a grinding halt last Thursday. Those of you that are regulars will see I've got a slightly different background and location. Unfortunately, much like the 100,000 a day in Australia, caught the dreaded coronavirus. Thankfully for me, no one in my family caught it. So I've been relegated to a hotel all by myself. I'm lonely, I'm sad, and it is a very, very terrible existence. However, good news is this is my 7th day. It will be all over for me after today, and I'll be released back out into society. So I'm very much looking forward to that. However, with that in mind, we decided to delay our new format and keep it simple, simply because the whole team wasn't together. So I do apologise to those of you that were looking for the new format today. It won't actually happen today. And I've just worked out earlier today that whilst I said it doesn't matter what's going on, we will always be here. Wednesday next week is the 26th of January, which is Australia Day. And those of you will know it would be un-Australian for us to hold this on such a great public holiday here in this country. So it is unfortunate. We will miss next week as well. So enjoy Australia Day next week. Take the time to enjoy yourself, your family, do whatever it is that you like doing. And we will be back on the 2nd of Feb with a new format, looking bigger and better than ever. So very, very much excited to bring that to you. But for now, we're going to just cobble together as best we can, given that I am remotely stuck here in a hotel, and I'm sure that I will stuff a few things up, but I'll do my best to try and make things run smoothly. So if you've just joined us, well, I'm not going to repeat that. So I'm going to try and share my screen, hopefully get it right this time because I haven't done this for a while. Let's see. Greg, just give me a thumbs up. That looks okay. It's shared. All right, great. So before I get into it, just have a think about what is it that you're struggling with? You know, what is it that's keeping you up at night? What are you finding is holding you back from achieving what you want to do? Now, obviously today is all about and our focus on creating a home, but it can be anything. Just take a moment, have a think about it. All right, so let me tell you that time and time again, I hear the same objections, the same reasons why people are struggling. And it boils down to a very, very straightforward problem. And that is everyone wants to know, how do I buy a home that I can afford, that's right for me, and that will add long-term value to my life without making a mistake? Now, I'm sure everyone on the line today will understand that, have perhaps experienced that, might be experiencing it right now. It is the number one reason why people are held back and why we struggle so much to find that right home for us. But there is a solution, and that's what I want to go through with you today. But before I get to that solution, those of you that don't know, who is Salvo? What do we do? Well, we do a lot of different things, but ultimately, we're all about helping you create a home. So whether that's helping you find a new property, building a new property, financing that property, managing that property, it doesn't matter what you're looking for. There is something that we can do to help you on that journey and add value to you. But for me, obviously it didn't start here. I'm a homeowner, just like most of you on the line, but I wasn't always here with Salvo. Going back a number of decades ago, I had a very simple, a very boring, and a very challenging job as a telemarketer. So, just think about it. All day, every day, I heard, piss off, go away, beep, 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 as people hung up. Don't call me again. Take me off your list. Why are you calling me? Get away. You're a creep. I hate you. Don't ever do this again. I could go on and on and on and on. But I learned a very, very valuable lesson through that. And that was that people don't want to be sold things. What people do want is they want to be helped and have value added to, some of the key things in their life. So, think about their health, their wealth, and relationships. And ultimately, people wanted to take back control. They wanted to be able to take back control, have control of their health, have control of their wealth, have control of their relationships. So, fast forwarding to where I am today, here with Salvo, between myself and, of course, the big team that we've got here, we create and build hundreds of homes every single year for people just like you. And we do that by putting in all of our experience, all of our knowledge, and everything that we know that creates a great home. And we give that control back to you by helping you along the way, finding the right property, financing that property, and managing that property. So we do it in a very systematic way, and we do that to give you that value back, but ultimately allow you to have control of your own wealth, your health, and of course, relationships, and adding back time to you. So the solution that I was talking about, I've got to be honest with you, I'm not going to solve that problem for you today. But what I want to do is give you an outline of the framework and how we're going to, move forward during this year, and how we're going to try and help you get a better understanding so that you can take back control and have control of your life and, importantly, your wealth. So the solution is really, really simple. It's broken down into 3 key pillars, okay? So the first one, number 1, is find the right property. So find that location, find the property that's right for you, find out what the customers want. Wherever it is, everything about finding, that is the first thing you've got to do, okay? Number 2, finance. You've got to actually pay for that property. Are you going to be paying in cash? Are you going to be having a home loan? Should you be refinancing that home loan? Should you be taking equity out of that home? Are you buying with another person? All of those types of things are very, very much key. And the third one, number 3, is managing that property. Okay. So whether that be, let me give you a quick example. I've heard so many people tell me over the years, I've gone and done this course, and the only way for me to build value and wealth is to go and do a subdivision and build my own house. I'm going to renovate and change this and change that. And I say to them, that's great, but you work 60 hours a week. You're all busy. You've got a young family. Where are you going to find the time to do this? And invariably it ends up in disaster. Right to the other end spectrum, for those of you that are investors, are you going to manage the property yourself? Are you going to outsource it? How are you going to find the tenant? How are you going to collect the rent? All those kind of things, managing it. So just remember, they're the 3 pillars. Number 1, find. Number 2, finance. Number 3, manage. And then what do you do with those 3 pillars? Well, you constantly go over and over, and you keep focusing on them. So it doesn't matter where you are in your journey, whether you're just starting out and looking to buy your very first home. You might be looking to upgrade, find your next home. Or you could be looking at getting investment property for the first time, or even your second, third, fourth investment property. These 3 key pillars are what will empower you and give you the ability to take back control and drive forward into 2022 and achieve what you want to do. All right, so that's how we're going to structure things. That's how we're going to be going through. As I did mention at the top of today's session, we were going to completely rejig the format. That's not quite possible today since I am stuck with coronavirus, isolating in a hotel by myself. So we are going to mix and match a little bit and still go through what we've seen happening around the countryside. So how we're going to do this, as always, and as we've done for the last couple of years, section 1, we're going to quickly run through some information. It's obviously been very, very quiet. There have been no auctions. I'll quickly tell you what I've seen happening around the countryside. We'll jump into the knowledge. We'll answer all of those questions that you guys have got, and then we'll close out with the next step. So there'll be the 3 sections of today. All right, let's get started. It is 2:40. We should have you out just after 3 o'clock. So first up, what are we seeing? What are the major themes I've seen happening around the countryside this week? These are the starters, thought starters, provoke what you've got to think about. So just take these in mind and then fire away all of your questions when we move to section 2. Okay, how do you read the Aussie market? Peaking, peaked, whatever. Really, really important to understand the distinguishment. Where did buyers see changes? Where did they go? That's a big talk about sea changes. Is it as big as we thought? Omicron versus Delta. I'm a victim of one of them. Who knows which one? How is it different this year versus what we saw last year? Home loans, they give us a great amount of insight, what's happening there. And then lastly, Melbourne rents, where are they going and what do we expect to happen for this year? Those of you that have been following last year will know I normally jump into the auction results. Obviously, last weekend, again, had no auctions as we were just back for the year. So nothing to show you there. And we can get stuck into it. If you haven't met everyone before, joined on the panel, we have Greg Arbeck, Jack Gian, and Lucas Karras. These guys will be answering all of your questions. How do you ask the questions if you haven't done this before? Really simple. Jump into the Q&A, put your question in there, and I will read it out live and answer, or get the guys on the panel to answer, or you can raise your hand and come live onto the stage. All right, that's it for the introduction. Let's get stuck into it. I will stop sharing my screen so you can see everyone's faces. Lucas, just give me a thumbs up. You can see everything good there. All right. So first up, my first question, while I get a chance to read through everyone. It's really, really important for people to understand, particularly right now, the difference between a market peak, peaking, or peaked, and how you do that and what it means. So, Greg, I know you want to jump in on this. So before Lucas tries to steal your thunder, can you sort of explain the difference between those three terminology? And perhaps even tell us where are we at the moment in the market?
Sure. Firstly, as you said, it's very important to understand the difference, as you said, between peak and the peak rate of growth. So when you get people out saying, "Oh, everything's peaked, that's it, it's over, things are over," that's not the case. There's a very big difference. So yes, the peak rate of growth has decreased. So when we look at that in context, March last year, per month, we had between 2 and 3%, maybe even higher, where prices increased to at their peak. Thereafter, the rate of growth, so the peak rate of growth reduced, but the overall rate of growth has still continued to grow. So that's the differentiation between peak and the peak rate of growth. So yes, the peak rate of growth has, I think we've reached that last year, but the peak hasn't been reached. And there's a few key things to determine that.
All right. Well, tell us.
Okay.
Share with everyone now. Those of you that are joining us live, or if you're watching the recording, I think Greg's going to give you some pearls of wisdom. So really focus here. There's a couple of key ways. And again, this is all about how you can take back that control that I spoke about at the start, and how you can really try and drive forward, understanding what you should be doing. So Greg, hit us with it.
When a market has peaked, now typically the way to determine that is when we see negative growth over a consistent time period. So for instance, if we see, the shortest time frame would be a quarter. So if we get consistent negative growth and over three months, so over a quarter, we can then determine in that particular location that in theory, the market has peaked.
So Greg, the reason for saying at least a quarter, I'm guessing, is that there can always be some anomalies, some fluctuations month on month. You want to see a consistent 3-month period.
You want to see at minimum a consistent 3-month period where you've got negative growth. So that every month, then you can say, well, the market has peaked. What's quite important though, when we look at history though, usually when you peak, you get a bit of leveling off or slight reduction, but overall, it's always followed by growth. Again, it's cyclical. So it's not, even if the market has peaked, it doesn't mean let's all panic and go crazy. It's a case of, right, these are the signs the market has reached its peak.
All right, got it. And what are some of the factors what are some of the other factors that people should be looking out for to help them determine, other than just seeing the hard data, what are some of these other tangible things that people can be looking for?
So before you start seeing those consistent things, there'll be a few things. There could be some policy related to interest rates. So we've spoken about these over the years, that the bank might put in some more, or the Reserve Bank or the regulator might start putting in some factors. So policy related factors in terms of interest rates and whether you can get credit or not. So when we see a tightening of that starts going, well, hang on, that is an issue. We can look at market factors. So are there more properties being listed? Is there less? What is the stock levels? What is the housing affordability now at this particular stage? And then economic factors such as what's the job market doing? Have wages sort of growing? What is actually happening? When those sort of three things are there, those movements in that can then start determining, are we reaching a point where we're going to see a peak in the market?
Okay, great. And I mean, I guess as well, I'm not sure if you touched on it, but obviously, every state, every city, every suburb is at a slightly different pace and has different factors that drive into it.
Yep.
So I guess you can't just look at it as a whole. You've got to drill down to your particular area, don't you?
You look at certain areas like the mining boom areas. You've got Perth, you've got Darwin, places like that. They'll go through a crazy increase and then it'll peak and then it'll drop like crazy because they've got other factors that determine that. So you've got to be very specific on where we're looking at. So we look at the overall, but generally speaking, you've got to look at, if you're looking at Melbourne or you're looking at a particular area, have a look at those factors will determine whether you think the market, where we feel the market has peaked. Certainly hasn't yet. There's no doubt about that. So, it's not time, as I always say now, to fall in a heap and think we've, if you're a seller, we've still got some good growth there. That should happen.
So, Greg, I'm putting you on the spot. When are we predicting Sydney, Melbourne are going to peak?
I think, probably later this year, early next year. That's what the people are predicting. We're starting to see a slower rate of growth, and once that reaches a certain point, we can then say we think it's going to peak later this year or early next year. That's probably where it will be.
All right, good.
Yeah.
I've seen a question here from Bobby, jumped on to when we're talking about sea changes, and I think he wants to know what is a sea changer, and what are we actually seeing in terms of this sea changer mentality?
Yes, James. I think the sea changer we're talking about a lot last year because we experienced a few times lockdown here in Melbourne and also in New South Wales across the country. So then the people starting to look in the property in the regional area and the seaside town, and it becomes like those kind of the property in that location in the regional and along the beach becomes very popular, and the prices increase a lot. And this year, I think it's been interesting to say the last year, 2021, which seaside town is most popular for the people they're willing to buy. They moved to last year when we had a lockdown. So according to the CoreLogic, measured at the highest total value of the sales in 2021, there is the two popular places in New South Wales and Victoria, which has recorded the highest the sales in value. And in New South Wales, the location, the area is Port Macquarie. They had almost 714 million in total of the sales over the 12 months to September 2021 across the 887 transactions. In Victoria here, the Ocean Grove is the most popular place in terms of the total value of the sales. It had 485 million in total sales in the year across the 466 transactions.
Interesting. I mean, I think what I see straight away from that is that, knowing Sydney and Melbourne well, they're both suburbs that, it's not a quick commute, but they're definitely suburbs that people would still commute to the city. So perhaps that's still showing, whilst people might have looked at this, that they expect they're going to have to be back in the office at some point, or perhaps even that, at a minimum, part-time coming back and forth. So I think that is an interesting concept. But, is that, that might be great for people that probably already own a home, buying a second home, a third home. But, what about first home buyers? Like, it's perhaps not necessarily practical. Just thinking of those numbers, you told me $485 million of sales in Ocean Grove over 460 odd transactions. I don't need to have my calculator know that's more than $1 million on average per home. what are first home buyers doing? Is that something they're looking at as well?
You're right, James. It's definitely not for the first home buyer. Like, very good calculation. Like the median price, and I think it's more than $1 million, is actually hit $1.18 million even for the property in the Ocean Groves in Victoria. So for the first home buyers, first of all, affordability becomes the issue for them. Second of all, eventually, they have to go back to work. They have to go to the work every day. And eventually they got the kids that needs to go into the school, and then they need the location, which is very convenient, very nearby the work, school, and all the facility, which most of the regional, they can't have that facilities. So for the first home buyer, surprisingly and not surprisingly, because last week, I'm reading the report from the realestate.com. It's showing the suburb which had highest inquiry to buy from the first home buyer across the country is the unit in Melbourne CBD, which is the top one on the list. So which also means the first home buyer, as they very understand what the situation, they look in the property has very good location. Second of all, is for them is affordable. I think, like you said, is right. And maybe for you, James, it's good for buyer that say said property. When you had your current situation, you can go there and and enjoy the 7 days. The first home buyer is definitely not the option.
Yeah. It's and I think we've talked about that for at least the last 12 months. That this affordability problem is becoming more and more of an issue for some of these first home buyers, and that everyone's great Australian dream of the quarter-acre block has probably died and is not coming back. And we've really got to look at different ways as to how we live today and into the future, and that's why I think the CBD and the surrounds are getting so popular, because they are a much more affordable option, still with having all that infrastructure and amenities. All right, now something near and dear to my heart, since Jack just made fun of me again being stuck here. Those of you that didn't join at the start, I was unfortunate to catch the coronavirus last week. So I'm stuck isolating by myself, lonely in a hotel. But before I was, it was definitely clear to me that, there are no lockdowns, but arguably in some instances, it's almost worse than the lockdowns of 2020 and 2021. Cafes are shut, events are being cancelled, all the things that we expect with a lockdown has happened. And, when you sort of look at these local businesses, why are they shut? Why are they struggling? Even in our office, I think we are down to maybe a quarter of the staff only haven't been off at some point with the coronavirus this year, which is a big impact. Is this perhaps going to be worse than what we saw last year with Delta in terms of the real estate market and house prices? Is it going to hold everyone back again? What are we thinking is going to happen?
Hi, James. Look, like you said, with Delta, we did have extensive lockdowns. With Omicron, things are totally different. Although we see the case numbers being smashed with Omicron, it seems that the hospitality and retail industry has been hit pretty hard. But for real estate, it seems to be business as usual. People are not going on holidays. They're not going out spending money. What they're doing, they're actually saving money. Research that was done recently showed that due to people not going on holidays and not spending money shopping as much, we have many home buyers with extra money in their offset accounts, something like 40 to 45 months ahead in their mortgages. So all of a sudden, these people are now thinking, we can't go on holiday, we can't go here, we can't go party. And they're starting to look about, well, let's buy a property, let's buy an investment property. Another research done by CanStar, a survey that was done recently for the New Year's resolutions. The three most popular New Year resolutions were to save more money, to buy a home to live in and to buy an investment property. So interest rates are still quite low. So as soon as that remains like that for the next couple of years, we anticipate to see an increase in property prices.
All right. Now, you mentioned about people thinking about buying an investment property. We're talking about first home buyers before. I know that we were chatting earlier about the Australian Bureau of Statistics put out the numbers in terms of loans for, I think it was November last year, just recently. What do they sort of show? And the reason for everyone on the line before Lucas answers that question, the reason why I love these numbers is that, you know, we see in real time sales occurring by the auction results and what's published, but it's only when it comes down to the home loan data, which lags by a few months, we actually get a good breakdown by, you know, because when people apply for the loan, we find out who are first home buyers, who are buying their next home, and who are investors. So hopefully, Lucas, you got some interesting breakdown stats for us on who actually is out there buying and what that breakup is.
Yes, James. In November, when the banks started announcing that we're going to, started raising the fixed interest rates, and they also increased the serviceability buffer, a lot of people were expecting that would be put a stop in the home loans market, but instead it went the other way. So new home loans jumped by 6.3%, which is the highest growth since January same year. And put it in dollar value, that was an increase of $31.4 billion. So we had first increase for owner-occupiers in 4 months, and first increase for first home buyers in 6 months. And also investors picked up 3.9%, which is 10.1 billion as well, which is the highest monthly total that the Australian Bureau of Statistics has on record.
Wow.
To speak more specifically about Melbourne, because we are based in Melbourne, Melbourne had the highest increase in the country for owner-occupiers, which was 9.7% in loans. That's in November alone. And 9.7%, you're looking at $6.3 billion worth. And also the highest first home buy loans in the country again, which was up 12.3%. Now, what these numbers did, they pushed the state's average loan amount to $620,000, which is $80,000 more than the average in January 2021.
Okay. All right. Interesting there. A lot of great stats. And as I said, it's always good to get a bit of an idea as to who is actually buying that's out there. We've just hit top of the hour, but before we break off, I did just want to ask, it really depends who you are, but Melbourne won another crown this month, which was the cheapest house rents in the country. Now, for those of you that are renting at the moment, that is good news. Those of you that are landlords, that's not such good news. Can someone, quickly give us a bit of a breakdown? What are the signs people should be looking for as to where those rents might be going, and what are we expecting to happen?
Yes, James, you're right. Melbourne is actually the cheapest capital across the country in terms of the rental. But we had to look at another side, because the Domain has released the rental report for the December, which showing the house rental in Melbourne here is jumped another 3.5%. And the medium rental is $445 per week. This is actually hitting the record on 2018, which was $440. So which means we have the big increase, big jump, even we're still the cheapest across the country. And also for the investor, for the owners, for the landlords, most of them, they have the unit apartment in the city area. It's also the good news because the rental is keep rising. So the December quarter is another 1.3% increase on the inner city apartment. So the medium rental is now $380 per week. which is very strong sign of the recovery. Even we haven't got the many students coming back from overseas, but we can still have some feeling because the price, the rental increase for both apartment and house is also the good sign, which means the stock is going to be already absorbed by the people, they moving into the city, moving into the Melbourne. So it's going to be in the next couple of months or this year, 2022, we're going to see the balance of the supply and the demand. And as long as the international border is open, people, students is come back to Australia. And also, like we said, we're talking about before, there's such strong, the demand from the first home buyer, which becomes some of the investment property has been sold to the first home buyer. There's a less stock for rental. So all those factor, and also the factor which is the rentals keep increase every quarter, will showing in the future, in this year, next couple of years, the rental is going to be jump a lot.
All right, good insights there. Thanks for that. Now, we've got a couple of minutes over the top of the hour, so I'm just going to close out with a few closing questions. And it's really important to identify where to from here. And that's what I really want to do. So before you tune out, I just want to close with a few thoughts. So just give me another 5 minutes of your time. So, the way that I see it is, you've got sort of a choice. 2021 is done. 2022 is well and truly upon us. And how are you going to move forward this year? How are you going to achieve what you want to do? So, you can do what you've always done and follow the tried and tested path, what I call path 8. And there's two things here that I see people do time and time again. The first one is they do nothing. Now, what do I mean by that? They don't make any changes. They don't actually take any active steps to move forward. Now, that's fine if you're happy with where you are. But just remember, if you don't make a change, don't expect a different result. So if you are looking for something to be different, you're going to need to make a change. And that leads me to the second thing that I see people do. And that is they go out there and they do it themselves. Now, I hope you do this as a bare minimum. Make those changes. Think about what we've discussed. Think about taking back control and moving forward yourself in this year. But what I really, really hope that you do, and where I know you'll get the most value, is to do path B. And that is, let us help you. Let us help you achieve whatever it is that you want to achieve. I've told you before, there's a number of different ways that we can help you. And here we're all about helping you create a home. So it doesn't matter where you are on that journey, whether you're just looking to buy your first home, your next home, or an investment property. We've got something and a way that we can help you through that process. Now, before I tell you how we can do that, I just need to be honest and upfront with you. This is not for everyone. We're not going to be able to help everyone, because you do need to be motivated, you do need to be confident, and you do need to be prepared to take action, because it's the people that take action that are actually going to get the results. You've got to actually be prepared to roll up your sleeves and do that work and understand the concept of having actionable knowledge that you can actually move forward with through that process. So if that sounds like you and you're still listening, well, then I can guarantee you that you will be the right person, you will be a good fit. So how can we help you? Well, at the moment, we know very, very little about you. We've spent the last half an hour together. You've asked some great questions. We've got to know a little bit more about where people are sitting and thinking, but we need to know more about you. So the next best logical step that I can recommend is that we meet up together one-on-one. Now, we can obviously do that face-to-face. We can do that over the phone, Zoom, FaceTime, whatever you prefer. And I'm talking about 15 minutes to 20 minutes of your time. Really straightforward, just to get to know a little bit more about you, give you a few ideas as to how we might be able to assist and where you're trying to go. Now, I guarantee you that this is the smallest possible investment you can make and still be guaranteed to get a result. So when we catch up with you, we'll give you a few key things that you can take away immediately and implement, just like we've done today. And we'll also talk about some longer term strategies that can help you smash those goals for 2022. So think about it. Are you prepared to invest 15 to 20 minutes of your time to actually get a guaranteed result? Well, if you are, then how do you do it? It's really, really simple. The first thing you can do is jump into the chat, and there'll be a link there to book it. You should have been redirected in your web browser to the booking page. And lastly, if you don't have your diary with you or you want to just think about the right time for you, we'll send a follow-up email with that link that you can book one of these sessions. So really, really straightforward, and don't delay. Book one of these now, because they will book out very, very quickly, as they always do, particularly at this time of the year, as everyone is keen to jump on and try and get their plans done. So that is it. I hope you've enjoyed today's session. I know it's been not quite as smooth as we normally do. As I said, we're obviously all separate at the moment, and I'm stuck in a hotel room. But I very, very much thank you for all of your time today, and appreciate you setting aside the time, because I know everyone is busy and you could be doing other things. Now, for those of you that weren't here at the start, just letting you know that next Wednesday is the 26th of January, which is Australia Day. And it would be un-Australian for us to hold question time on that great national day and that public holiday. So unfortunately, we will miss next week. We will keep you informed with what's going on, and we'll still send you plenty of great updates throughout that week, but we obviously won't be able to see you live on that day. But we will be back the next following Wednesday, which I believe is the 2nd of Feb, with our all new format. We'll all be back together. Fingers crossed. I know I definitely will be there, because I'm done with coronavirus, and hopefully the rest of the guys will not catch it in between that period. So from me and everyone on the panel, thank you very much for your time today. And we look forward to seeing you all again on the 2nd of Feb for our brand new format and more informative insights that we will continue to deliver throughout the rest of the year. So thank you very much for your time, and I look forward to seeing you when you join us next.